हेलो दोस्तों, वेलकम टू ट्रेडिंग की बात ग्रो के साथ। उम्मीद करता हूँ आप सब बढ़िया हो और वॉलेटाइल मार्केट के मजे ले रहे हो। हर हफ्ते की तरह टाइम आ गया है कुछ नया सीखने का। आज हमारे साथ है मिस्टर आमोद, जो कि एक ब्रिलियंट सिस्टमैटिक ट्रेडर है। आमोद कर्नाटका से हैं एंड साथ में सिस्टमैटिक ट्रेडिंग भी करते हैं। आमोद से आज हम सीखेंगे सिस्टम ट्रेडिंग के बारे में और साथ ही ड्रॉडाउन्स को एक मैथमेटिकल और टेक्निकल वे से कैसे डील करना है। आई थिंक ये किसी भी ट्रेडर के लिए एक बहुत इंपॉर्टेंट टॉपिक है कि अपने लॉसेस और ड्रॉडाउन्स को कैसे हैंडल किया जाए। तो ये हम सीखेंगे आज मिस्टर आमोद से। दोस्तों, एक छोटी सी विनती है आप सबसे। आमोद कर्नाटका से हैं और हिंदी समझते तो हैं, लेकिन हिंदी बोलने में थोड़ी सी तकलीफ है। तो ये सेशन हम इंग्लिश में रिकॉर्ड करेंगे, लेकिन हमारी एक प्रेजेंटेशन सारा टाइम स्क्रीन के ऊपर रहेगी। तो प्लीज लैंग्वेज को एक बैरियर ना बनने दें। अगर आपको एक्चुअली कुछ सीखना है तो कोई फर्क नहीं पड़ता ये एपिसोड इंग्लिश में है या हिंदी में है, आप समझ पाएंगे। हमने इसको इस तरीके से रिकॉर्ड करा है। सो प्लीज बेयर विद अस टुडे। एंड चलिए आइए सीखते हैं आमोद से सिस्टमैटिक ट्रेडिंग और ड्रॉडाउन्स के बारे में। हाय आमोद, वेलकम टू ट्रेडिंग की बात। हाउ यू डूइंग मैन?
I'm doing good, Arjun. How about you?
I'm doing well, thank you. How is the market treating you in this volatile environment?
Uh, it's treating me well, I must say. I mean, as long as your risk is managed, I guess that's all you can do, right? You let the market reward you and manage your risk. So I must say, irrespective of whether it's a profitable day or a small lossy day, I have to say it's treating me good. Yeah.
That's great to hear. Trading something in the Adani counters also, or is it just the index?
No, not at all. Not at all in the Adani counters, simply because I'm a systematic trader who trades only what I backtest, and I haven't backtested any news-based events. So obviously, I wouldn't be trading Adani.
Only what has been backtested. That is all you trade.
Yes, that is right.
So Amod, I've always found your tweets and our conversations very insightful and to mention very technical and data oriented. So where does this all come from? Is it like coming from being an engineer, or how did you get into all this?
Uh, I think it could be that it's because of my engineering background, but generally speaking, if you have to do something confidently, you need to have the backing of something that you trust. And data is something that you can trust because it's unemotional. It does not have feelings. It can't cheat you. It's just raw data. It's about your interpretation of data that you can cheat yourself with. But other than that, data is just agnostic to all external factors. It's raw, right? So I've always felt that it's good to go with a data oriented approach, and that's what I've been doing in the stock market.
So you trade completely in a systematic manner?
Yes, that's right. My trading is completely in a systematic manner, and I've been a systematic trader from, I would say, 2019 beginning.
Prior to that, when did you start trading?
I started looking at the stock market in around September 2017. That's when, so September 2017, I must say that I had no idea what stock market was, and for the initial couple of years, I did not risk big, or I was still trying out different things to try to get to know what exactly suits me, suits my type of requirement from the market. And from 2019 onwards, I've been trading in a systematic way, in a more disciplined way, I must say.
I think in order to scale big and trade size, it is better to have a systematic approach, and that is what you've been following. And I've seen you compound your capital consistently over the past few years.
Yeah, yeah, that's right.
So, Amod, what has been the secret to this gradual scaling up and all this compounding?
uh, I think it's got to do with the multiple factors. First thing is you need to have a good system which you have backtested thoroughly, that has a positive statistical expectancy, right? And on top of that, you need to have good position sizing rules. You need to have good risk management, and to extract the maximum out of your capital, you need good money management principles. And on top of that, irrespective of in spite of having all these things, you can not do well if you don't have the right mindset to trade and think long term, right? So I think getting all these things right is very much essential to scale, and systematic trading is all about that, and that's what has helped me. Yeah.
So, Amod, what kind of systems do you trade? Is it a blend of systems or do you trade a particular type of strategy?
Uh, I trade a combination of systems that benefit out of trending moves as well as choppy non-directional moves. And as far as the kind of uh, the instrument wise, if I have to say, I trade Bank Nifty mainly. I trade Bank Nifty on the option selling side of things. I mainly trade time based straddles and strangles, and I also trade option buying via in the form of range breakouts in Nifty and Bank Nifty.
Okay.
And almost 90-95 percentage of my trades are all intraday.
It's fascinating to see that you've been always so open about the kind of strategies you trade, and I've seen you post it publicly also. And you've been very frank that you've been trading time-based straddles. Amod, since you've been trading them for a very long time, have they kind of lost their edge, or is it working in a similar manner? What kind of tweaks have you made over the past few months, years?
I do feel it has lost its edge, but it's not because 920. In my opinion, it's not because 920 straddle is overcrowded or anything like that. The price action that has happened over, let's say, the last 1 year or so has been such that breakouts haven't sustained as well as it used to sustain earlier, and as well as not as frequently as, right. And even if they sustain and proceed to hit fresh day high, they give a huge pullback which might take out your stop loss. So I think the extent of pullback has increased. So all these factors, kind of affect 920 straddle as well, because 920 straddle with a tight stop loss is essentially a range breakout strategy. The range is decided by the premiums on offer on that day and the extent of the percentage of stop loss on the premium that you put, right? So breakouts haven't been that good, and it obviously is going to affect 920 straddle. And the kind of changes that I have made is add more diversification to ensure that even if 920 straddle, the plain vanilla or the more, what to say, 90% plain vanilla 920 straddle is not working, something else is working, right? That's one part, and the other part is that I try to move from at the money to out of the monies. The
Okay.
reason being, I think over the last 1 year or so, there has been more spikes, and the sensitivity of an out of the money strike is way lesser compared to the sensitivity of at the money strike with respect to the movement in the underlying. So since there has been an increased frequency of price just spiking up and reverting back to mean, I decided to move to out of the money. That's strangle. So I would say 920 strangle now. Yeah.
It's interesting to hear that. Last week, we had a word with Praful Kulkarni, and he mentioned the exact same point that he's also started doing more of strangles instead of straddles, and exactly the same thing that the sensitivity of ATM options
Yeah.
is kind of more now, I would say, in respect to spikes, basically,
Yes.
than it used to be.
Yes.
But
Yes.
it's always fascinates me to see that a lot of people are doing so many different things
Yeah.
and the same thing, and still all are making money. And
That's
and
the beauty of
what
the
I
market.
That's the beauty of the market. Like you said, you trade more of Bank Nifty. There have been people who tell me that they just trade Nifty. Bank Nifty is too volatile for them. So each to his own. But I think what sets apart the profitable ones from the others is their methodology, their consistency, and the discipline. I think
Yes.
that is what sets you apart.
Yes. I think so.
So Amod, our lovely viewers are watching you today, and they're here to learn something new from you. What kind of stuff will you be discussing with us?
So I would be discussing on how to handle drawdowns in trend following strategies. You know, and also a bit on my style of position sizing in order to handle drawdown the way I do. I'll be talking about that. Yeah.
I think it is one of the most important and challenging things that any trader faces, drawdowns.
Yes.
And each time it feels new.
Yes, absolutely. That's because I think each time you hit a drawdown, it would be because of a slightly different type of price action, and you'd always have that thought in your mind, whether my strategy has actually lost its edge. Will the kind of price action that's suitable for my strategy, will it ever come back? And when it finally comes back, it's always a good feeling. Yeah,
Always a feeling of, ecstasy, reaching that peak again.
yeah, that's right.
So, Amod, shall we begin with the presentation that you have for us?
Yes, sure.
Okay, let's begin.
Yeah. So let's get started. Uh, First thing, a bit about trend following, right? Uh, Trend following is where market gives you a trending move, as the name says, and breakouts are a subset of trend following. You get a breakout of a certain level, a resistance or a support, and beyond that, more buyers or more sellers join in, and you get a trending move. So the purpose of breakout trading, which is part of trend following, is obvious: to make money out of the big moves that happen after a breakout happens, right? So that's the purpose of trading breakouts. But the downside to trend following or breakout trading is that you go through long time drawdowns. That's because that's the nature of market. Majority of the times are non-trending. You get trending moves probably only 20 to 40% of the time in a given time frame. And also trend following involves having small losses and riding that one big trending trade all the way, right? Which means that you might get a series of small losses, and that can lead to a high equity drawdown. So that's about breakout trading, right? So now let's take a simple example. This is just a simple chart where let's assume the y-axis is the bank nifty spot price and the x-axis is time, right? Now market opens at 9:15 and it closes at 3:30. You have around 6 hours to make a profit or loss, or don't trade at all. So now let's consider the period from 9:15 to 12:15. That's the morning half of the market. And let's say the market bank nifty formed a range in this duration. Then the ideal scenario for a range breakout trading system to prosper is the second half is a trending move. It gives a
Right.
breakout, the breakout sustains, and you get a trending move, right? So this is the kind of dream breakout or a dream trending move that you would like to have.
Right.
Now let's go and test how well this kind of system performs. We'll go to a backtesting platform called StockMock, where you can backtest these kind of ideas with a single click. Disclaimer: this is not a paid promotion of StockMock. I'm just a happy customer of StockMock and using the platform.
So, Amod, there are a lot of such platforms available which people can use.
Yes, there are a lot of platforms available. We have StockMock and there is AlgoTest, which I know of. And then recently I've heard of a platform called Backinzo. I haven't used either of them, but I've heard they offer similar features.
Yeah. I think retail backtesting platforms are coming up. It's nice to see tools for regular traders like us.
Yes, yes, that is true. Back in 2018 or 17 or even 19, when I used to try to figure out a strategy, these kind of backtesting platforms were not available at all. Finding a strategy that has a positive expectancy itself was a huge challenge.
Absolutely.
The systems that I traded in 2019, I backtested them manually. That was huge effort. And today we have a single click, you get the entire backtest result,
Right.
right? Yeah. So let's go to one of these breakout systems that we talked of in that paint diagram. So here what I have is a 200 premium call, and a 200 premium put of Bank Nifty weekly options, and I'm trying to backtest the range breakout of the price that forms between the 916 to 1215 range, right?
Okay.
And on the exit side of things, you exit at loss if a stop loss of 25% on the entry premium is hit, or if the trade is running at 3:15, 3:25 p.m. in the afternoon, you are going to exit it, be it at profit or be it at loss. So this is a purely a intraday strategy.
So, Amod, just to understand, you've put in two time frames here, 916 to 1215. I believe that is the range you're looking for. So once
Yes.
spot or future breaks out of this, you'll take a trade?
No, that's not the case. So this is on the premium. The call. This is the range breakout on the call premium or the put premium
Got
for
it.
the given day.
Okay. Okay.
The
This this is
chart
this
on,
is range breakout of the options.
yes, correct. This is on the weekly options premium
Okay.
of the current expiry.
Got it.
So what that means is that the you might have a slight breakout on the spot chart, but actually it might not trigger a breakout on the options premium chart because of the
Okay.
premium decay.
Right.
We'll head back to the backlist, right? So I'm just buying one lot of call as well as one lot of put. Whichever gets triggered for the day gets bought, right? So that's what the strategy is. I've already backtested this particular strategy from Jan 2017 to Jan 2023, which is a solid 6 years duration, right? And now the next question is how much can you trade, right? How do you size position? So if let's say we have an account of 10 lakh, and
Hmm.
let's say we are willing to risk 0.5 percentage per trade, right? You have a 10 lakh account and you are willing to risk 0.5 percentage per trade, which means that you are willing to risk 5,000 rupees per trade. Now you are entering a premium of 200 with a stop loss of 25 percentage. What
Okay.
that means is the premium at risk is 25 percentage of 200, which is 50, right? And
Right.
bank 50 lot size is 25, which means that the rupee per lot at risk is 50 into 25. So to get the number of lots you can trade to risk, to cap your risk at 5,000 rupees, you need to divide it by 50, which is the premium at risk, and divided by
Four
25, which is the
lots.
size of bank nifty, which means you'll get 4 lots. So I'll just add a multiplier of 4 to the one lot back test, and let's wait for the numbers to get updated.
So Amod, you'll be taking only one direction trade,
Yes, that's right.
the one which gets triggered first. That is the only trade you'll take.
Yes, that is right.
Okay.
So now if we look at the numbers, right? So the margin that gets blocked on 4 lots of buying bank nifty premium of around 200 is hardly around 40,000. You have a 10 lakh account and only 40,000 is getting blocked.
Right.
And on the margin that got blocked over 6 year duration, uh, this strategy has yielded a return of 3,281 percentage.
Wow.
And
This
on
is
total
this is
capital,
before slippages?
this is with a slippage of 0.5 percentage on the premium.
Okay. Okay.
And on the total capital, which is 10 lakh, which is what we have assumed for sizing the position, the return is around 127 percentage. It's 12 lakh 71,000, and on 10 lakh it's 127 percentage over 6 years. But now what we are interested is not on the return. What we are interested is drawdown, right? Now look at this drawdown. I think is going to make it's jaw dropping. Basically, the drawdown is 2,82,000, which on a 10 lakh account comes out to be around 28%.
Yeah.
28% drawdown, most people would not be able to accept it. No, forget 28. When the drawdown hits 20%, I think people will stop the strategy,
Right.
right? So now the question, how to reduce drawdown? How do we handle this? What can we do, right? Now let's say your drawdown target is below 10%. One thing that you can do is instead of trading 4 lots, trade only one lot, right? So that's going to bring the drawdown number to 20, this 2,82,000 divided by 4, because you are
Right.
reducing your position size by 4.
Correct.
uh, we'll wait for the number to get updated. It should get updated in a while.
So that
Yeah.
is manage your position sizing in order to reduce your drawdowns.
Yes, correct. You're reducing your size by 4, which means your drawdown also got reduced by 4. Now it's 7 lakh.
Right.
But the flip side of this is that you look at the returns. The returns as well has got reduced to a mere 31% over 6 years, which definitely is not what you're in the market for. 6% is something that fixed deposit probably gives, right? On most
Right.
times. Now the next question: what else can we do to uh, reduce drawdown? Right. So option one we already talked about: reduce the risk, but this comes at the cost of reducing the return as well. Right, and the return to max drawdown ratio remains the same because both the numerator and denominator get scaled down by the same extent.
Yeah.
Now, what we are going to look at in this presentation is how about increasing the risk to reduce drawdown. What that means is that how about adding, see, you only utilized 40,000 of your capital of 10 lakh, you still
Hmm.
have 9 lakh plus capital left. How about utilizing this capital and risking some capital more on top of your breakout strategy in order to reduce the overall drawdown at system level, at your account level? In order to do that, you'll have to figure out some strategy which is functionally different from the breakout strategy. It should benefit out of price action that breakout strategy suffers from, right? So if you figure out such a strategy, the correlation coefficient between the breakout strategy and that strategy is going to be negative, and that in turn has the potential to not only reduce the drawdown, as well as it also has the potential to increase the overall return, because this strategy tool that you're adding, it has a, I mean, the assumption is that it's good enough to have a positive expectancy on its own, and it yields profit, so it adds up to the breakout system profit,
Right.
right? So that also increases the return to max drawdown ratio, right? So now
So you're
let's,
adding a strategy that acts contra to your breakout strategy.
yes,
That
that is,
kind of works when the breakout fails.
yes, that is correct. The idea is that you want to have more number of win days. When breakout strategy does not perform well, you need to have some backup in place that's going to benefit because of breakout not working well.
Right.
So now let's look at the different ways in which the trade can play out once 12:15, the time 12:15 window has passed, which is the cutoff time for the range breakout.
Okay.
So scenario one is the one that we talked about. This is the dream scenario for a breakout, right? It just moves one way up, and your breakout system obviously it makes big money.
The best scenario.
Yes, correct. The best case scenario. The second scenario you have where the breakout triggers, but it does not sustain and it does not have a follow through, which means that the price reverts back to the mean somewhere within the range, right? The third scenario that we have is that you do get a breakout. The breakout triggers, but it does not sustain. It does not have a follow through, and it in fact fails and goes to somewhere near the bottom of the range, takes support, and then again comes back and closes the day at somewhere within the range. And then you have the fourth option where it's a no trade day. The range of the first half of the day did not get broken out. So in in such a case, because it's a no trade day, it's going to be a no profit or no loss day, right? And then you have a fourth case scenario where you get a breakout, you get a sustained move after the breakout, and then probably you hit a resistance and there's a fear sell off and you come back to within the range, right? Here in this kind of trade, there is a big move, you see a big MTM profit, but you give it all back. This is a breakout trader's nightmare.
Yeah.
And then you have the next case scenario where it triggers a breakout, it comes back, hits your 25% stop loss, and then goes on to make the day high. So this type of days, the breakout trader probably loses sleep.
Amod, I have to give it to you. You've explained it really well. All these visuals, you've captured all the scenarios, and I think the way you've put it all over here, all these six graphs, it's making a lot of sense to me also.
Hmm.
So,
Yeah,
so great way to explain it. Kudos.
yeah, thanks. So now let's look at what we can do, right? So let's say that along with the breakout system, we deploy a mean reversion system, right? Mean reversion system is where price starts from a certain point, it travels all over the place, and then again comes back to the same point, almost, theoretically the best case scenario. So now let's say that we add a mean reversion system to this kind of breakout system. Then on a day when market trends up big, there is no mean reversion at all. So you make a loss. So the breakout system makes a big profit, and the mean reversion system makes a small loss. It's
Correct.
max loss probably, and combined you still get a big profit because breakout has sustained well, and breakout is like a unlimited profit, theoretically unlimited profit kind of system, and you get big profit at the system level.
True.
And then the second case scenario is here where the breakout triggered but came back within the range. So the breakout did not sustain and it was in loss, but if you have a mean reversion system here, it could benefit out of this kind of price action. Our job is to figure out such a mean reversion system, right? And then the third case scenario, again the breakout triggered, it failed, but price closed somewhere within the range. Our job is again to figure out a system that could benefit out of this kind of market moves, where the breakout fails. And then the fourth kind of scenario is where the market is within the range in the second half, and there is no trade triggered in the breakout system, but still, because it's a range bound market, you could aim to benefit out of this. And then the fourth and the fifth case scenario is where a big two-way volatile move or a big one-way volatile move happens, where price reverts back to mean probably, but that's after it's way outstretched, or price reverts back to mean and then later it gets way outstretched. So these are the type of days where it's very difficult to be profitable. You have to give it to the market. Market also has to win, right?
Right.
Just kidding. So now let's look at a mean reversion strategy to combine with the breakout strategy. Now, our purpose with mean reversion strategy is that in a given time frame, most trades are non-trending. Most days are non-trending. Your job is to make some consistent return, be it small, be it big. Our job is to make some consistent return on these days where breakouts haven't sustained or breakouts haven't happened, right? Now, the feature of a mean reversion system is that your win rate will be high, and your time drawdown will be way lower, which means you keep hitting frequent equity highs, unlike a breakout system or a trend following system. But once in a while, you can have a big loss when market gives a huge trending move, right?
Right.
So let's try and look at a mean reversion system. I'll move it back to 4, which was the actual position size. Yeah, so now let's look at a mean reversion system, and which is going to benefit out of the scenario where the breakout system does not perform well, right? So what I have here is a strangle that I'm a 50 premium strangle of Bank Nifty that I'm selling day in day out, no matter what, at 12:15 p.m.
Got it.
And the stop loss on the individual leg is going to be 125 percentage. That's pretty wide, right? And the exit time is going to be, if the stop loss is not hit, we are going to exit it at 3:25 p.m. because this is an intraday trade again, right? And I have sold one lot of call and put here, right? Now the idea behind selecting 50 premium here is that you want to trade far out of the money. Reason being, when a breakout happens, right, it's trending, there is every chance that it might stop trending, reverse, and come back to the days range, first of days range, right? You want to ensure that as much as possible, you need to factor in, as you need to cushion, you need that cushion for as big a move as possible for your mean reversion trade to be still on. And farther out of the money you go, as I already told, lesser sensitive is the premium to the underlying movement. So your chances of having the mean reversion trade intact after a breakout is triggered is higher as you move farther from the at the money.
Yes.
So that's the reason behind I've selected a 50 premium and not a higher premium strangle,
Okay.
right? And it's a wide stop loss. So the structure here is that of a 920 straddle. You have, to a call and a put being sold with individual like stop loss.
Right.
Structurally, it's the same, but functionally, it's very different. Functionally, it's trying to capture a choppy day after the entry of the trade. Unlike a 920 straddle with tight stop loss.
Right.
So we'll update and run the strategy from 2017 till 2023. So we have the backtest of the mean reversion strategy complete from January 2017 to January 2023. Let's see how it performed. So here again, the backtest was for one lot. Let's do the math to calculate the position size, right? Uh, so we have our capital, our assumed capital is 10 lakh, and let's say we are going to risk 1% per trade, right? 0.01, I multiply that with 0.01, and so the rupee at risk is 10,000 rupees.
Okay.
Now the premium at risk, so I missed telling one point. Uh, so once one leg stop loss is hit, I'm exiting both the legs. The reason being, the purpose of having this strategy is to have both legs running to account for a choppy day. Having one leg alive, incremental reward is way lesser than incremental risk. So I wouldn't
Okay.
like to have both legs active. So I've turned it off. Now, if I want to calculate the risk here, so it's the worst case. Let's assume the call side did not decay at all and put side hit stop loss and we exit both legs together. Then the risk is 50 into 1.25. The stop loss is
Okay.
125 percentage, right?
So
The
basically, you're exiting the entire strangle in one go whenever
Yes,
one leg gets hit.
that's right. So our rupee risk is 10,000 and our risk per lot is 50 into 1.25, which is the premium at risk, into bank nifty lot size, which is 25, right? 1562. Now I divide 10,000 by 1562.5 and I get 6.4. I'll round it off
Okay.
to 6, right? So we'll get here and multiply this by a factor of 6. We'll wait for the multiplication to happen and the results to show up. Yeah, there you go. We have the results. So what you have here is the S1 column is for the breakout. The S2 column is the backtest data, backtest result for the mean reward system. And what you have here is the combined, right? Now, individually, breakout strategy has given a drawdown of around 28%, which is 2,82,000,
Okay.
right? And the mean reversion system has given a drawdown of around 37,000 only, which is 3.7 percentage. Now when you combine both these systems, your system level drawdown is only 74,000. Even though the breakout system is yielding a drawdown of 28%, when you combine this with a strategy that is functionally very different, that captures the kind of market moves that puts breakout system in loss, when you combine it with such a strategy, your drawdown reduces drastically to like 7%, 7.5%, right? So this is because if we look at the correlation coefficient, right, you see it's minus zero point 0.4. Negative zero point 0.4 is, I would say, highly non-correlated between
Yes.
two strategies, right? So the idea here is that option buying system uses very less capital. You see the return on deployed capital being huge, and option selling system, because the margin blocked is more, the return on deployed capital is way less. You combine, the idea here is to get the best of both worlds.
Right.
You look at the win rate, the option buying system win rate is 42%, option selling system win rate is high 64%, and overall you are getting a high win rate. It's best of
Right.
both worlds.
Right.
Drawdown, high for breakout, low for mean reversion, low combined, best of both worlds, right? And profit, both are profitable, it gets added up, best of both worlds. So the idea here is to get the best of both worlds, I would say,
Okay.
right? So that's what I summarized here. Just get the best of both worlds. Big profit on breakout days, shorter time drawdown. I miss showing the time drawdown, right? So time drawdown for a breakout system was 619 calendar days.
Is
Huge.
that 2 years almost?
Yeah, almost 2 years. You can say as good as the strategy has stopped working. Now, you know, a personal opinion of mine is that, when a question gets asked, should you stop trading a strategy? For me, I would look at the, how logically sound the strategy is. For me, a first half breakout strategy is a very generic, non-curve fitted strategy. So the price action for this strategy has been very, unhelpful during that 619 trade days. But you never know when, times, the good times are back. So what I would rather do is probably reduce the risk in this strategy or diversify it with non-correlated strategies so that, money keeps flowing in into the account via the other strategies.
Yes.
Right? So the max drawdown, the time drawdown gets reduced to 47 days from 619 days individually for the breakdown. Again, best of both worlds. Right?
Okay.
Yeah. So that
So
was,
Amod, I
yes,
think I think you've given a very good idea as in how to combine different kind of strategies to very fundamentally different systems, and club them together to create a very robust system that reduces your drawdown and also increases your profitability,
yeah,
even increases your win rate, I would say,
yeah,
because often there are, when you look at two different systems individually, the statistics are very different compared to when you combine them together.
yeah. That's
So
true.
the results on a basket are very different than individual backtested results of systems.
Yes, that's right. Yeah. So now a quick look at the drawdown profile of the two strategies, right? So by the way, I'm sharing this system not because I trade the exact system. It was just an example to show how you can, diversify between non-correlated, functionally different strategies to, last the distance. If you were trading only breakout, I think you would have probably stopped trading, right? So it's important to have diversified set of strategies that, at the system level, at the account level, you always have something working for you, right?
Amod, just a quick question. I'm
Yeah,
seeing the drawdown graph, and post say January 21, 22,
yeah,
there's been a drawdown phase.
yes.
Now, when you are trading your own systems, when do you decide to shut a system down?
So to shut a system down, I would rather do a qualitative analysis rather than a quantitative analysis. I would try to understand why the system worked in the first place, and is there any structural change, a more permanent structural change that's not trying to cause the system to underperform.
Okay.
So if I don't find a reason, then probably I'll stick to my opinion, I'll stick to my belief system, and keep on trading. But I might reduce the position size, depending on how it goes. So for this system, for example, it's a range breakout system, which I feel is logically, there is nothing wrong in that. For s- or rather, I would say I haven't been able to. If I were trading this system, I wouldn't stop trading this system because I haven't been able to figure out structural change that has caused this system to stop working. So which means that my belief system says me that this system will mean revert and hit go back to equity high soon.
Okay. So do you also reduce your position size as the drawdown approaches historical levels?
Yes, I do. So until the drawdown approaches historical levels, I do not reduce my position size. That's because I factor in the drawdown upfront at equity high while I size position.
Okay.
I'll talk something about that in a in a
Yeah.
bit. So before that, just a confirmation of what we saw in the stats. We are seeing it via a graph, right? So 2017 was a pretty bad time for trend following or a breakout. So you see a long drawdown for the trend following system or the breakout system. But what you see here with the mean reversion system is that it has constantly hit equity high. There has been winning streaks. It's had a very good time. And at the system level, at the account level, two strategies combined, this again has hit equity high frequently, unlike the range breakout alone, right? So I think that's the same thing that has been happening in 2022. The breakouts haven't been sustaining. It's been bad, and the mean reversion system has been doing good to ensure that money keeps sticking into your account. Right? You see the equity high being hit very frequently in
Mm.
2022. Yeah, so that was about combining. That was about adding risk to reduce drawdown, adding risk with additional strategies to reduce drawdown. Right. So now I would like to speak a bit on how I size position to account for drawdown. Now, generally we see this graph, right? Hmm. Let me expand it a bit. So if you have a 20% drawdown on your account, then you will need 25% to get back to break even. That's because when you have a 20% drawdown, you have sized your position, assuming 100% of your capital being allowed. And when you hit a 20% drawdown, you have lesser capital. And on this lesser capital, you need to make a higher percentage to get back to break even, right?
Right.
But so my way of sizing position is that I would like to risk equal rupees or size same on all trades. The reason being that I believe at a given single trade, whether it's going to be profitable or lossy is pretty random. It's as good as a coin toss, 50%.
Mm-hmm.
It could be anything, right? And when you have a sequence of losing trades, right, the next trade being a profitable trade is as good as a single individual trade. It's as good as 50% probability. And with trend following or breakout, you might, after a series of small losses, you might get that one big winner that gives you huge returns, that recovers all of the previous losing streak losses and
Right.
gives you more, right?
Right.
My idea here is that when I'm on a losing streak, if I reduce position size, then the next big winner that comes up, I'll be trading it with way lesser size than what I traded while I entered into the drawdown, which I want to avoid. So I want to be trading the same lots or same rupee risk for all the trades. So the way I size position is something like this. So let's focus on column B for now. Let's say our capital is 10 lakh and our historical max drawdown is 20%, and our risk per trade is 1%, which is 10,000.
Yeah.
And let's say we are buying Bank Nifty options premium worth 200 with 25% stop loss, which means that the premium at risk is 50. Then for 1% risk, I can trade 8 lots. That's the calculation we'll get, right?
Right.
And now let's say we hit a 10% drawdown, which means the drawdown amount is 1 lakh. 1 lakh is 10% of 10 lakh. And the capital remaining is only 9 lakh. And the rupee at risk is 9,000, because 9,000 is 1% of 9 lakh. We are risking 1% per trade, right? Now, because the rupee at risk is lesser than what we risked earlier, the lot count would again be lesser than what we traded earlier. It's got reduced to 7.
Right.
Now let's say we hit a 20% drawdown, which is the historical max drawdown.
Mm-hmm.
Right? Now you have capital of only 8 lakh. Your risk per trade is only 8,000, and because of the reduced risk per trade, your lot count also is going to be 6. For me, this is a non-ideal scenario, because if there's a big winning trade, a big trend following, a big trending trade that comes up next, I'll be trading it with 6 lots only. Whereas while I lost with 8 lots and 7 lots. Right?
Okay.
So what I'm going to do is I'm going to risk on the notional capital. So what I mean here is that, let's say if our drawdown is 20%, then I'll deduct that 20% drawdown amount from the capital that I have in my account. That's going to mean that my notional capital is 8 lakh.
So
Now,
you're always keeping that buffer of 2 lakh rupees with you.
yes, correct. So the way we arrive at this 20% number, it could vary. You could do a Monte Carlo simulation and pick the 75 percentile, 95 percentile, whatever it is, or you could take the mean of the top three max drawdowns. You could, use different methods to arrive at this number. That's
Right.
that's a different thing in itself. Uh, so once you arrive at the number that you are willing to, factor in, I reduce the drawdown amount from the account size to get notional capital, and whatever risk per trade that I take, the 1% risk, I'm going to risk it on the notional capital, right?
Okay.
Which means it's 8,000, and now I have six. I trade with six lots because 8,000 rupee risk comes to be six lots, which we
Right.
already know from here, right?
Right.
Now, when we hit a 10% drawdown, right, the drawdown amount, the 10% here is on 8 lakh that I calculate, because I've assumed I have only 8 lakh, not 10 lakh. All my risk per trade is on the 8 lakh. My drawdown is also will be on the 8 lakh, and my return will also be on the 8 lakh, kind of, right? So 80,000, and my 10% of 8 lakh is 80,000. And what we have left with is 9 lakh 20,000. Now you do the rupee risk. The rupee risk is still going to be 8,000, because I'll be calculating on the notional capital and
Right.
not on the full capital. Which means that even after losing one trade, the next trade I still trade with the same lot.
Right.
The same gets extended to even when I have a 20% drawdown. Right? I still trade with the same lot. Now suppose
Right.
suppose the drawdown breaches 20%, then my notional capital itself is going to reduce. Let's say it hits 30%, then my
Mm-hmm.
notional capital itself is going to become 7 lakh,
Okay.
and 1% of 7 lakh is going to be 7,000, and automatically the position size keeps getting reduced.
Right.
So just in case the system lost its edge, I'm already sizing low because of that. If it reached historical max drawdown, and if we suspect it to have lost its edge, then automatically by following the system, I'm already sizing down my position, right? And also, in the market, there will be times when your strategy is in sync with the price action, and when your strategy is grossly out of sync with the price action. So when on a winning streak, you want to keep hitting the ball out of the park. You need to keep increasing your position sizing, and ride the good wave. So column D is about that. So it's the same kind of calculation, right? So after 10% profit, my total capital has increased, and my rupee risk per trade is going to be calculated on the new notional capital, which is
Okay.
20% of 11 lakh deducted, and so on.
Okay.
So you size up on a winning streak and size down on a losing streak. Sorry,
Right.
you size up on a winning streak and do not size down on a losing streak.
Right.
So that's about the way I size position to handle drawdown.
I think I can relate to this approach of yours as, I also keep a certain buffer with me at all times in
Mhm.
order to, have some spare capital for the drawdowns.
Yeah.
Otherwise, I also don't follow an approach where, I'm trading different lots every day.
Okay.
Some are very comfortable with that approach, but I
Hmm.
also feel that markets can be very random at times, and you don't know when that big winner will come.
Yeah. True.
So you have to be trading equal quantities just in
Yeah.
order to capture that big trend. Obviously, I have some filters in place, but more or less, you want a very consistent position sizing approach.
Yes, that's true. Yeah. So summarizing what we talked about is diversifying to reduce drawdown, and accounting for impending drawdown upfront while you size your position. And once you're done with these two things, I think when drawdown approaches you, instead of saying why me, you got to say try me, because you already factored in all you can do, right? Yeah.
Amod, how do you handle the psychological aspect of it? The most challenging bit.
So psychological aspect of it, I think it's very important to ensure that you're not dependent on trading returns for putting food on your plate the very next day. Because if you're into such a thing, then it's going to put a lot of pressure for you to make money each and every day, and market is not obligated to give money each and every day to no one, right? So psychologically, it's very important to have multiple sources of income, preferably, so that in a drawdown phase, you're not after your trading returns to put up a livelihood, right? So that's the important part, I think. And for me, I think because I have another source of income, which is the salary income, the way I see drawdown phase is more like a numbers game. It's more like a video game where when you run, your life gets shortened from 100% to 90%. And as long as you eat some fruits, nuts, whatever that comes in the video game, it will go back to 100%. It's about biding that time, playing the game tactically, with a planned way, in a disciplined way, and going back to that 100% from 90%, right? So that's the way I look at it.
I think it's a very good example that you've given, and that you know tells us that you're a pure systematic trader, one who's very experienced with systems and trading systems. That's in your blood now.
Yeah, right. That's right.
Amod, you've given us a lot of ideas, and I'm sure the viewers are having a great time watching this discussion with you. I've jotted down some ideas for myself to test. It
Yep.
was it was it was wonderful talking to you. Thank you so much for joining us today and sharing us with us all these insights on systems, drawdowns, and building combinations.
Yep, sure, Arjun. It was my pleasure talking with you. Thanks for having me on the show.
Pleasure to have you. Thank you, Amod.
Thanks, Arjun.
तो दोस्तों, हमेशा की तरह उम्मीद करता हूँ यार आज कुछ नया सीखने को जरूर मिला होगा आपको। दैट इज द होल पॉइंट ऑफ दिस कि आपको कुछ नए ट्रेडिंग के बारे में कुछ टिप्स, कुछ आइडियाज सीखने को मिले। जब भी कोई एक ट्रेडर आता है वो अपने व्यूज शेयर करता है, अपने एक्सपीरियंस शेयर करता है और कुछ नए आइडियाज देके जाता है। प्लीज वर्क ऑन दोस आइडियाज, तो आप उसको इम्प्लीमेंट कर पाओ अपने एग्जिस्टिंग ट्रेडिंग स्टाइल के अंदर। जैसे आज आमोद ने हमारे साथ ड्रॉडाउन्स को एक बहुत डिफरेंट तरीके से देखने देखने का एक नजरिया दिया। उन्होंने बताया कि कैसे डिफरेंट सिस्टम्स को कंबाइन करके हम लोग ड्रॉडाउन्स कम कर सकते हैं, विन रेट को इंप्रूव कर सकते हैं, एंड इवन ओवरऑल प्रॉफिटेबिलिटी को बढ़ा बढ़ा सकते हैं। सो आई थिंक ये बहुत ही इंपॉर्टेंट आइडियाज हैं जो कि आप अपनी ट्रेडिंग में डाल के उसको इम्प्रोवाइज कर सकते हैं। अगर ये आपको शो पसंद आया हो तो प्लीज एज ऑलवेज लाइक, शेयर और सब्सक्राइब जरूर करें। प्लीज शेयर इट विद योर फ्रेंड्स, फैमिलीज एंड whoever is your in your trading circle। अगले हफ्ते हम फिर लौटेंगे ऐसे ही एक और ट्रेडर के साथ। और एज ऑलवेज अगर कोई ट्रेडर है जिसको आप चाहते हो हम इनवाइट करें शो पे, तो प्लीज मेंशन करें अपने कमेंट्स में, हमें जरूर बताएं। वील डेफिनेटली ट्राई एंड ब्रिंग देम ओवर। थैंक यू फॉर जॉइनिंग अस, और याद रखें ये मार्केट सबका है बॉस।
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.